Hey, what's going on, everybody? What's going on? Happy Sunday. Happy Sunday. So, as I always do, I just want to make sure I am live. So, let's check real quick just to make sure it's live. All right, I am live. Just want to make sure because I know I kind of come in here and just in case no one joins, at least I know this information will be out there. At least I know I'm live. So, it'll capture on YouTube. If you are new to the channel, please let us know how you got over here. Let us know what's kind of, bring you to want to engage in real estate, talk about real estate. Also, don't forget to put where you're from in the comments below. And then also, if you're watching this video on a replay, please don't hesitate to comment below if you have any questions, any concerns, or if you want to reach out to me via email. My email address is below as well. Excuse me. I feel like I got so much daggone gas all the time. But thanks for tuning into the channel. I got my little straw here, my little straw, so I can drink better this time around. But tonight we're going to basically just touch on, as you guys know, recently the Feds cut rates again by 0.25 basis points or a quarter base point, however you want to say it. So we're going to talk a little bit about the Fed's decision to cut rates. This is, I believe, what, the fourth time this year, if I'm not mistaken. If I am, please put it in the comments. Let me know if I'm wrong or not. I believe this is the fourth time this year. They cut the first time in September, I believe, by a 50 basis point. Then they cut again in November, I think. November, and then again in December, I believe. If I'm wrong again, put in the comments, let me know. I could be off. I'm just trying to remember by head as far as what happened when they went to cut. Also, please let me know if I'm freezing a little bit. For some reason, this platform, I love StreamYard, but yeah, StreamYard has a lot of issues when it comes to freezing. And I've been noticing that a lot lately when I've been tuning into other content creators' platforms to watch things around real estate or just any platform that I watch. I've been noticing a lot of freezing, almost like some freezing has been going on with the StreamYard platform. So just let me know if you guys you encounter any freezing during this live. Again, thank you guys for joining in tonight. We're going to talk about the Fed's cuts, and we're going to talk about the affordability of the housing market. What's 2025 looking like? I am in the Metro Atlanta area, so remember, put your name, put where you're from in the comments. Join into the chat. This is a discussion amongst everybody who decides to tune into the channel when we're live. And if you are back on a replay, don't forget to leave any comments below. So let's kind of jump into the recent Fed cut, and we will get this ball rolling. And then I also want to tell you guys, hey, what's going on? What's going on from New Jersey, New Jersey? So I also want to tell you guys too. It says okay. I also want to tell, hey, what's going on, Kenya? What's going on? So we're going to be talking about the Fed's recent cuts, how it possibly affected mortgage rates. I don't think most people know how mortgage rates are actually um, indirectly, I should say, indirectly is affected through the Fed's cut. So Feds typically cut because of inflation. They want to bring down things around, let's say, inflation-wise, gas or certain economical things, right? But indirectly, the mortgage is related to it. So mortgage rates do not always go in line with what the Feds do as far as cutting rates. Traditionally, they have, but this time go around because of the economy that we've seen. I'm believing this myself. This could be different by another forecaster or realtor or a mortgagor. Because of the pandemic and us seeing the way the economy kind of was handled a little differently as far as mortgage rates being brought all the way down to, we had mortgage rates like 2%, and now it's kind of rebounding. So I feel like a lot of the effect that's happening now and mortgage rates kind of getting out of control is due to the recent pandemic situation. But anyway, let's kind of go into this mortgage stuff. If you have any questions, put it in the comments. If I can answer it, I definitely will. Again, this is just giving you some knowledge around what's happening in the real estate market. You should always be in tune, especially if you're looking to buy or sell in the future, just to get some more insight. So let's see what happened when the Feds recently cut the mortgage rates. Why is this? Okay, up here. Sorry, guys. I'm trying to find where I put it. All right, here it is. So I had everything on the screen already, and then I'm like, wait, where did I put it at? All right, let me go up. Sorry, I was reading this article earlier just to kind of bring it to y'all. All right. So again, if my thing freezes, let me know. All right. So it says this: the Federal Reserve on Wednesday cut interest rates for the third time 2024. So I said the fourth time, so the third time. Sorry, you guys. In 2024, despite the move, mortgage rates increased. It says the 30-year fixed rate mortgage spiked to 6.72 for the week ending December 19th, a day after the Fed meeting, according to Freddie Mac data via the Fed. That is up from 6.6 from a prior week. So basically, what happened is when the Feds cut the rate, the mortgage rates basically they went the other way. So when I talk to a mortgagor, again, I always tell people go and talk to a lender, a mortgagor, someone that does finances. I am a realtor. I do know the scope of it all, but to get more in depth, more understanding around it, you should definitely talk to them or an economist if you kind of want to understand more of the Fed situation. But anyway, what I talked to the the lender last time, they said the reason why when we first had that first cut in September of 50 basis points, which was a half a point, interest rates had went up. So I don't know if you guys might have encountered maybe some realtors telling you guys like, hey, the Fed's cut, and then I'm thinking that the interest rates for the mortgage was going to go down. Instead, they went up because typically most lenders kind of bake the predictions in. So when you see a lower interest rate offhand earlier prior to like a cut per se, and if it goes the other way, it's because it was already baked in, because they're basically trying to predict what could possibly happen as far as the cuts when it comes to the rates from the Feds, and then they bake that into the interest rates or mortgage on the mortgage level per se, and then that's how they kind of adjust some of the interest rates for the mortgage. And of course, there's more that goes into details because we all know that the Fed. We have the Feds, but also the mortgage field. The mortgage rates are affected by like the 10-year Treasury bond and everything. So but that's how lenders, as I was, when I talked to my lender, she said, or he, because I deal with a bunch of different lenders, said that that's the reason why that the rates kind of shot up. So they shot up, and then let's read some more. It says, at an intraday level, the 30-year fixed rate mortgage increased 7.13% on Wednesday, up from 6.92 the day before, per Mortgage Daily News. So we'll look at how the rates kind of adjusted up, and the rates have softened back down again. So they shot up the day after the Feds announced, which was December 18th. They shot up the 19th, and then they're coming back down and they're adjusting back down. But what we're looking at right now is that the rates are still in the sixes. If anybody wants to know, again, everything is subjective to who you are as a person. If you're trying to buy a home, right, in regards to what interest rate you can get, because the debt to income ratio and different other factors can give you a different credit score. All those things can give you a different interest rate. The national rates, I'll show you guys on Mortgage News Daily. So if you guys are ever wanting to know more about like the national interest rate per se, the average in which they calculate, you can go over the Mortgage News Daily and kind of get like almost like a summary of what your rate could possibly fall in between, right? But again, everybody's situation is different. So you might get a lower rate, you might get a higher rate, or you might get the rate that you see there nationally. It says the Fed's latest adjustment lowered its benchmark rate by 0.25 basis points. So now we're down a full point. They cut 50 points in September, 25 points again, I believe, in November, and 25 points now in December. The central bank has cut the federal funds rate a full percentage point. Okay, I just said that. Sorry. And now we are going to go into, somebody just texted me. Oh, okay. All right. Sorry, guys. So now let's kind of adjust. If you got if you guys want to say anything in the comments, please let me know. This could be, it's a lot to take in. Let's kind of move over to Mortgage Daily News, where they kind of have this national, the national rates. And I can show you guys, let me know if you guys can see this. I can show you guys how the rates kind of adjust. So rates move all the time. They move, day to day, week to week, hour to hour. If you just call a lender, that's why I always tell people, especially if you're in the process of trying to buy or wanting to buy in the future, right? You want to obtain home ownership. You should always talk to a lender, a professional, and don't feel like you have to be forced to apply for a loan when you talk to a lender. just like when you work with a realtor, don't feel like you have to be forced to buy a house or forced to sell your house. This is just coming to these people just to get some more information around what's happening in the market. I feel like a good realtor, a good lender, anybody in the real estate profession, we're here to help you guys. We're here to educate you guys. And we're not here to, well, I don't want to say we're not here. I'm personally not here to sell to anybody. I'm here to educate you. You create your own decision around what you want to do financially when it comes to purchasing a house. And if you need assistance, I can help you, of course. But I'm here. The biggest part of it is educating you guys. Okay. So if you come to me, ask me questions. If I know them, I'll give you the answers. If I don't, I'll lead you to someone that knows it. Because of course, I don't know everything either, right? But anyway, let me stop talking and get to this. Okay, so this is the Mortgage News Daily website. This shows, okay, so the Feds on December 18th. So that right now, what we're looking at right here, we're going to look at, let me see, the 30-year fixed. All right. So the 30-year fixed right here. So the Feds met on, I believe it was the 17th or the 18th of this week. And then, so right here on the 17th, as you guys can see, the average per se interest rate was 6.92. After the Feds kind of announced that 0.25 base points, it increased to 7.13. Again, this is the average. This doesn't mean this is what you're going to get. I'm just showing you how it kind of fluctuated after they announced that that 0.25 base points. And then it went up again December 19th. As you can see right here, it's showing it going up. And then December 20th, it started to adjust back down, right? And then as of today, you'll find out what it's adjusting to come Monday. But that's what is happening. Let's see, she say. She said, why does it seem the rates drop so low during the peak of COVID epidemic? So, in COVID, Kenya, what ended up happening is because it was almost like a sense of fear, right? They were scared that no one's going to buy anything, no one's going to purchase anything because everybody's in a house. No one has any, people are possibly either getting laid off. They're not sure how people are going to basically live throughout, life per se, as far as when it comes to making money. So they decided the Fed, Jerome Powell, who is the president over at the Feds right now, I believe the chair, sorry, he's the chair over at the Feds right now. He decided that he wanted to lower the interest rates, which made it better for us to borrow money. It made it cheaper, I should say, cheaper for us to borrow money. So they lowered the interest rates, and when they lowered the interest rates, what happened is people started buying more. So people were buying more and more, and that was a way to try to adjust and hopefully save the economy from any type of financial situation, any type of maybe a crash per se in any area or any sector throughout the economy. So that's why the interest rates were lower around that time. But now, since we've come out of the pandemic, and we've kind of gone forward, everything has to be readjusted, because what ended up happening is because the interest rates stayed low for so long, people started buying so much money, so many things, and spending so much money that they're trying to adjust inflation. She said people started buying in cash too, huh? Yes, people was buying in cash. People are still buying in cash. Like I'm gonna try to see if I can show y'all some things on our MLS. The problem with YouTube is that if I show you an address, it will literally flag my video because they think that I'm sharing people's information. I'm not trying to do that. I'm really just trying to help you guys see what's happening in the system, especially in the Metro Atlanta area. But I'm like, when I checked on here today, because I look at the MLS every day, I feel like I need to get a life. But I'm always looking at my MLS every day, and I look at like the smallest little things. And one of the things is, especially like properties that are millions and millions of dollars or hundreds of thousands of dollars, and I still see people paying cash. And I'm like, where is this money coming from? And this is what I'm saying. And I think this is what's happening. And that's why they keep saying like our economy is strong, because for some reason, people are still paying with cash down here in this Metro Atlanta area. Like I saw a couple listings today on the MLS, and hopefully I can pull it up. But a house that was like $10 million. And at the bottom, we can scroll down all the way to the bottom once it closes, and we can see the financing option. It'll tell us like FHA, if someone bought with FHA, conventional, if someone paid with cash. Other might mean they might have combined it some way or did some type of other financing, or like USDA or whatever, however people kind of close with the financing terms. And I've been seeing a lot of cash, and I'm like, these are $1 million properties, and I'm seeing cash. I'm like, what the heck is going on? I'm like, where's this cash coming from? So yeah, people were buying with cash during that time. People are still buying with cash. I don't know what's going on. Hello at Clark from BRL. What's going on, Eddie? What's going on, Eddie Smallhorn? So you guys, if you don't know, Christina Smallhorn, this is her husband, and they have a wonderful YouTube channel. I was on it earlier. They come on every Sunday, 4:30 p.m. Eastern time. Check them out. And you will not be disappointed. And if you aren't subscribed to her channel, go over and subscribe to Christina Smallhorn's YouTube channel. Also subscribe to Jackie Baker's YouTube channel, Jen Sylvester's YouTube channel. Was it Living in Omaha with David Matney's channel? It's a lot of wonderful YouTube creators around real estate out here that are great to listen to, great to kind of chat with, and great to get more information from. So go over there and check out their channels, you guys. Thank you, Eddie, for jumping in and supporting. I appreciate your support. Eddie said, wish I had the cash to pay. I wish I had the cash too. I'm like, where is this money coming from? I'm gonna try to see if I can show you guys, because it might be hard because the address in the MLS system is at the top where the cash is at. But I think if I scroll all the way to the bottom, it'll just show you like the cash amount, and I mean the amount they paid for it, and then if they paid in cash or whatever. So it's crazy, y'all. I don't know what is going on. 10 million. I need to know what they're doing. I'm in the wrong business. LOL. Yes, I'm thinking it might be like a celebrity or somebody that is financially wealthy or has a business or something, because when I went to the tax records, it's in the LLC. So I noticed that a lot more people like wealthy people, celebrities, big company people, big presidents of companies, like founders, owners, they put a lot of their stuff in LLCs because they don't want people to just know how to know where their house is at. Basically, it's a way to kind of hide your name to the address, or they might put it in like a family trust. Typically more people that are, I hate to say the word wealthier, but people who have a means to money kind of put their stuff more like a business type of entity, a way to kind of safeguard things. So it's kind of hard sometimes to figure out who's the owner of said property. But I'm gonna show you guys. If I forget, tell me to remind you guys so you can see that I'm dead serious. Like, people are buying with cash out here. He said, Kenya, I'm also in the wrong business. Yes, we all in the wrong business. What's going on, Lang? What's going on? Good evening, finally. Yes, I'm so glad that you're finally able to chat in the comments. I'm so glad. Finally, I see the comment. This is my cousin, you guys. She's the one that's always texting me on my phone. So hopefully I won't have to look down at my phone no more. But anyway, let's kind of get back to it. Continue to comments and continue to, definitely comment while we're on this live, because this is the purpose of me going live to talk to you guys about real estate. I'm on a different device. Okay. All right. So what did Eddie say? He said, I have a few LLCs and I still couldn't buy it in cash. Oh Lord, I'm trying to be like everybody else. I'm trying to be like, so this is so back to how the interest rates kind of adjusted. So like I said, the Feds met this December, what was it? It was either Wednesday or Thursday this past week. And this is what happened. So the interest rates went up, and then they're starting to adjust back down. So let's get off of here, and then let's kind of move over to we're gonna go over to the whole thing of what they're saying is like mortgage rates are falling, and supposedly with mortgage rates falling, this is what they had said in 2020. So this is what they had said in August of 2024. So this kind of goes back from where we're at now. But I just wanted to kind of let you guys see what they were predicting. So around this time, the mortgage rates were a little cheaper. I did see some people getting interest rates that were FHAs in like the fives, like the high fives, the low sixes. This is when the mortgage rates were a little softer. They had adjusted a little lower. And then this was before the Feds had met in September. And then the interest rate adjusted up again. So this is what they were saying. It said mortgage rates are falling, improving home buying conditions. Here's what to know before you act. So again, this was August 2024. So I kind of just want to show you guys what they were saying then. And then you guys saw where we're at now. It says, despite being a hallmark of the American dream, buying a home is less affordable for many these days. Yes, it is. Buying a home is very like I know earlier I was on Christina Smallhorn's channel, and she has a similar sentiment I had that I've been having, and I've been stating with some people that I don't believe that buying a home should be a luxury. I believe buying a home should be a dream that's obtainable for anybody in America, anybody all over the world, because we're not the only country having problems when it comes to home ownership. So I believe that if you want to buy a home, that it should be obtainable. It shouldn't be a luxury to purchase a home. It shouldn't be a luxury to be able to live somewhere. It shouldn't be a luxury to be even be able to rent. You know, what he said, make sure to hit that like button. Thank you, Eddie. Yes, please, you guys, hit the like button. It helps, like he said, it helps to get the stream out to the masses. I appreciate you guys. Hit the like button. Don't forget to subscribe to the channel if you're not. But thank you, Eddie. I appreciate it. Yes, hit the like button, you guys. But yeah, it shouldn't be a luxury. Like even renting nowadays, is like almost like a luxury. And I have this conversation all the time with my dad on the phone where I tell people it's crazy because okay, I'm about to get into personal business. It's not my personal business, but a family personal business. But I ain't gonna put their name out there. So it was a point in time where I had a cousin of mine who actually lived inside of a hotel. And there's plenty of people in America nowadays and possibly all over the world, right, living in hotels because they can't afford to buy a house, they can't afford to even rent, or because of the way things are being adjusted now as far as the guidelines to even renting. Like when I first started my real estate career, I actually helped people in rentals. As of right now, as I've jumped into it further, I now only serve people when they come to buying and selling or trying to invest right in properties. But I do have a team of people who help people with rentals as well. But I personally don't service rentals no more. So I'm sorry, y'all. Don't beat me up. But just being in that field when I started and servicing rentals and seeing all these guidelines put in place where you have to have at the time it was like a 620 credit score or higher. You got to have no evictions, no bankruptcies. I even saw somebody get denied because they had a car repo on their record. I'm like, what is going on? And then you have to make 3 times, depending on who you're working with, right? You have to have 3 times the monthly income. Some of the places are doing 2.5 times, some places are doing 2 times. But I'm like, what is going on? I'm like, so if the rent is $2,000 a month, that means someone has to make $6,000 a month to rent. I'm like, what is going on? Like, there's a big economical problem when it comes to just housing in general. And it doesn't have to be in the sense of obtaining home ownership, but just in renting. And it shouldn't be as much like being in this metro Atlanta area. And I've seen it throughout different states that I lived in, because I lived in California, I lived in Philadelphia, I lived in New York City, and now I'm in Atlanta. I lived overseas in England, and I've seen homelessness to the extreme in every city, in every state, and even being in a different country. And I'm like, what is going on in the world that people and I know sometimes everybody might not want to be in a home. I get it. But everybody should be able to have home ownership or obtain some type of home. So let me stop. I'm going on a whole tangent, but yes, because I feel like I stepped on the soapbox, Sean. I'm like, because it just hurts my heart. It really does. What did Eddie say? To have a roof over your head is a human need, not a luxury. Exactly. It's not a luxury. It shouldn't be it's not a luxury. It's a need. Been there is no fun. Yes, it is. It's no fun. I had to, like I said, I had to always go visit my cousin. She used to live in a hotel. I can understand saying that homeownership is a dream. He said, but that dream should have a path to achieve. Exactly, should have a path to achieve said dream. Homelessness, so many out there. Yes, it is. It's so many. But let me get back to what we're talking about, y'all, because I'll go down a whole rabbit hole, and people be like, "Well, I came here to talk about this. How did we get to this level?" I just have so much passion just to make sure people are okay, you guys. I just want people to be okay. So anyway, it says the higher mortgage rates and the shortage of houses on the market relative to the demand have kept prices elevated and created a financial crunch for many would-be buyers. It says the median sales price for homes rose again in July. So again, remember this article is it's still in 2024. This is a little dated, a couple months. But I kind of wanted to talk about this article so that we can dive into what they're kind of saying now. As we hit the end of the year into 2025. The median sales price for homes rose again in July, 422,000, up 4.2% from a year earlier, according to the National Association of Realtors. It says mortgage rates have already started to come down from recent highs, largely due to the prospect of a Federal Reserve-induced economic slowdown. The average rate for 30-year fixed rate mortgage dropped to 6.35 on August 29th, from 6.46 a week ago. The lowest mortgage rates have been in 15 months, according to Freddie Mac. So when we come to talking about this situation, right? And this was in August 2024, July-ish, mid-year. How the rates had dipped a little bit. So I know people have bought houses because I've been talking to a client that I'm working with currently, and she bought a house 3 years ago. The lender told her, "Oh, it's okay, buy the house. You can refinance in a couple years. Rates are going to adjust lower." Da 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 da. Hey, it is what it is. Um, I don't like that talk because I'm like, I don't know what's going to happen tomorrow. I don't know what's going to happen next year. I'm like, all this information I'm reading now, all this predicting that I'm doing now, it can blow up in my face and it could be totally different next year. Like I'm predicting a slower market next year as far as home sales, home purchases, depending on what price point you're purchasing in, a dip in this is off of what I'm looking at my MLS, a dip possibly in high price or homes priced above like 400, $500,000 and up. I'm predicting they'll probably drop a little bit in price, or give some type of concession somewhere, and then prices that are lower, let's say like 100,000, $200,000 that are like entry level homes now. I'm predicting that they might go up a little bit next year. So maybe if a house was $200,000 this year, it might go up to maybe 210 next year, or 230. That's what I'm predicting, but I could be wrong, right? This is just what I'm taking the data that I'm reading on my MLS and I'm adjusting it to what I think could happen. So I could be wrong, but let me know if I'm freezing, y'all, because on my end I'm freezing. It's free. I'm freezing. What's going on? Is it Emerald Dice? Hopefully I'm saying it right. Paper currency is an extortion tool used by the government to enslave and bleed dry its population. Hey, it definitely is. We have to, unfortunately, in America and of course around the world, there's different forms of currency. And in order to be able to purchase things in the world, we have to utilize whatever currency that we have in this country. But yes, it definitely is. It definitely is a tool, used by the government to keep us kind of in a rat race, right? And unfortunately, we have to make the money per se to be able to so I guess to live wherever we're at. It would be great if we could go back to the days where people were trading per se, bartering. Maybe I give you a cow for a chicken or something, but most of us don't have cows and chickens. So, but I definitely agree. I definitely agree. It is definitely a tool. So yeah, so that's a little bit about that per se when it comes to interest rates. But sorry you guys if I feel like I'm all over the place. If you feel like I'm all over the place, just say Devon, slow down. You're all over the place. Just let me know. Um, it's just that I want to kind of get to the MLS and kind of show you guys what's happening. So basically, like you guys already know, the unaffordability level around the world, it's not just in the US when it comes to housing, is getting out of control. We're hoping things will adjust. People are hoping that the interest rates will adjust per se. But if the interest rates, with what people have been saying, is that if the interest rates dive lower, it could possibly cause for another out of control situation where people go out and start buying houses again and prices might go high. She said, "You're fine. Excellent teaching." Okay, all right. Just let me know because when I be on here talking, I feel like I'm all over the place and I go on a lot of tangents. So you'll notice. Um. So yeah. So they're saying people are predicting that if interest rates go lower, home prices will go higher, and they're just saying that because one, when it comes to currently right now, they have a thing called they're calling it a lock-in effect, right? So we talked about this on our last live with Lauren. And so basically it's saying that everybody has interest rates below like that 5% level because a lot of people either refinanced at the 2% to 3%, or they bought at 2 or 3%. And it's causing a lock-in effect where people don't want to sell their homes. However, some people don't even want to be in the homes that they bought, but they don't want to sell because they don't want to go out and buy something that's more expensive with a higher interest rate. So now they have a higher mortgage note. And as we're seeing, as people continue to buy these high-priced homes, when the property assessor comes around and they assess the taxes at the end of the year, like down here in Georgia, depending on what county you're in, they assess the property taxes every year. And as they assess those taxes, if you're paying a mortgage note, that gets adjusted into your mortgage note, right? And and so it causes your mortgage note to go up a couple $100. And so with that happening, most people are like, I don't want to be in this home, but I don't want to sell because my interest rate is lower. In the case insurance goes, my premium of insurance goes up, or the taxes go up, or my HOA fees go up because everything's kind of shifting up. They're like, okay, well, what am I going to do if I go buy another house? Higher interest rate costs more money, and then all this stuff adjusts again the following year. So people are just trying to basically just stay in put now. So that they're calling it the lock-in effect, which is creating, as they're saying, it's creating more of an unaffordability situation because typically you get people reselling their homes at the same time of new construction being built. And right now, new construction is being built. However, resale is not as high. And you are getting some homes, especially down here in the metro Atlanta area. You're getting a lot of flippers too, like local investors, mom and pop investors that are buying older homes and flipping them. But I'm going to be honest with you guys. Most of the flipped homes that I've seen recently haven't been good flips. They've been very not very well done per se. I've been in a couple where the foundation is sloping. I've been in a couple where the plumbing is not the best. I've been in a couple where they will change the inside of the house. So I call it where they try to make everything looks pretty from the eyes. It's almost like when you go to the grocery store and you see all the pretty apples and fruits out in the front. And then if you get into the middle, you might see the ones that are not like kind of not the best looking per se, or a little like ripe per se, or rotten, I should say. It's almost like what they're doing with these houses with some of these flippers, and it's not every flipper because there are some great people out here that are still doing some great work when it comes to flipping houses. But the ones I've been in lately in the Metro Atlanta area have been a lipstick on a pig, and they haven't been the best flip job. And then they're not doing anything, like they're flipping the house, putting LVP laminate flooring in. So that's the flooring, the type that they're putting in is the one on the roll. So they're taking a roll, they're just cutting it, laying it down. Um, they might put a new roof on, and they'll say in like the remarks, new roof, and they might put like a new HVAC system in, and they might new LVP flooring, great new light fixtures and all this stuff, but yet the foundation is sagging a little bit. Um, the plumbing might not be the best, electrical panel is not up to date. It's a lot, y'all. So let me get back to what I'm talking about. What Paul Roberts, he said, worst time to buy a home, most cannot make the payments, forget creative financing by lenders, bankruptcy coming over time, beware. Yeah, everybody, you never know. So what I tell people, because I get what you're saying, Paul, what I tell people is that buying a home is subjective to who you are and where you are at in the time that you want to purchase that home, right? In my opinion, is buying a home right now great for a lot of people? No, it's not. Home prices, like you said, they're unaffordable. Most the mortgage payments are higher, so it might not be a good space to buy a home right now, right? So I totally agree with you in that instance. But again, everybody's financial situation is different, so we can't put a blanket statement on everybody, right? Because like I said earlier, and I'm going to show you guys in the MLS, is people out here buying $1 million homes with cash. So like their situation is different from maybe somebody else's situation, right? So, but I agree. You just got to be aware. You got to know what your finances are looking like. Like I said, I'm not here to put pressure nobody to buy a home. I'm just here to educate you guys, let you know what's going on in my market, and just read what they're what the experts and some of these economists are putting out there, and just dissecting it, right? So, but thank you, Paul. Appreciate it, man. Hey, what's going on, Monique? What's going on? That's okay. It's all right to be late. It's all right. Ontario, Canada, house prices are up 200% in the last 5 years. Free COVID money blew up the market. You're not lying. You are not lying. That money in COVID really messed up the real estate market. I have my own theory around it, but everybody says that I'm crazy as far as, because basically what I feel like, I'm like, okay, the interest rates went low. We had a lot of investors, like Wall Street investors, corporate investors, coming to the market, as well as far as people either moving up and purchasing homes, or first-time home buyers getting in the market per se, purchasing homes because interest rates were lower, people refinancing, everything was kind of going on, money everywhere, money just flowing everywhere, right? And so what I said to myself, and again, this is my opinion, don't beat me up in the comments, but I was saying like, okay, most people, the average person is not watching interest rates per se, and saying like, okay, this is the best time for the interest rates is 2%. Let me jack up my house $200,000 more than what it normally goes for. Typically, as it appreciates per year, like typical appreciation is between like most economists say between like maybe 3 to 5% a year. Depending on where you're at, it might be 1 to 3% a year, but typically it ranges around at 3 to 5% a year. So for it to inflate so much, like you said, 200% in just the last 5 years, that's a lot of inflation as far as the prices of a house. And I'm thinking like, well, what average person is like, okay, the interest rates are down to 2%, and I'm about to put my house up $200,000 more than what it actually is worth according to appreciation value the following year. So I kind of thought that it was almost like a corporate investor, Wall Street situation, a government situation that they came here and they wanted to attack home ownership and they wanted to start buying houses and like putting the prices up on houses. So then it could create a wealth gap where it's like, okay, we have the wealthy, we have the poor per se, and we have it where it's unattainable for home ownership. So everybody can go into like a renter's market per se. And I kind of saw it, even though this wasn't in the housing market, but I kind of saw it because back in the day, and you guys, I don't know if you guys just do this, but this is back in the day information. It has nothing to do with real estate right now. But back in the day, when I was younger, I used to, buy computer games, right? Or let's say like The Sims. Let's use The Sims per se, right? The Sims for a reference. And you can actually buy the disc, pop it into the computer, and you actually own the game. Nowadays, everything is subscription based, so you own nothing. It's like be happy and own nothing, but pay me my money every month if you want it. And that's where I kind of related like uh, real estate once the pandemic happened and how we shifted out of the pandemic a little bit, and seeing how much of these Wall Street investors and corporate investors came in, bought up so much um, single family residential homes and kind of shifted the market where it's like, okay, we're going to turn, this is a time for us to kind of grab the market like we did in 2007, 2008, 2009, 10, 11, 12, because that financial crisis went all the way to like 2012 and like early 2013, where these investors were kind of grabbing up the market. And it's like, now let's grab it again because the interest rates are low. Let's shift stuff and let these people be happy to own nothing. So that's kind of how I kind of related it, almost like an analogy to like when I used to buy games back in the day when I was younger. But yeah, I'm off topic. All right. Anyway, but good. But like you said, Emerald Dice, that's definitely what's happening. So it says, so this is right here. It says homes are unaffordable in 80, this gets out the way, and 80% of large U.S. counties, analysts find. So this was in July of 2024. So this is why I brought up the last thing, because they were like, oh, it's affordable because interest rates adjusted down. However, in this article, around the same time, it's saying home prices are unaffordable. So it's like, let's be real, about what we're saying. Let's try to give as much real information to the public, right? Because home prices are unaffordable, and it's around the world, you guys. A growing swath of the U.S. is unaffordable for people looking to buy a home. New data shows. It says between April and June, no homeowners is in 80% of 589 counties were spending more than 28% of their wages on housing costs, including mortgage payments, property taxes, homeowners insurance, according to a report from a real estate analytics firm, Adam. So Adam is a good website, you guys. If you ever want to kind of get more data or analytics around real estate, they kind of gather a lot of our real estate data. It says home prices have hit record highs this year, and amid a shortage of affordable properties and mortgage rates hovering around 7%, more than twice their level in 2021. Homeowners are typically advised to spend no more than 28% of their wages on housing, and anything above that level is considered unaffordable. But Adam found that the average homeowner with a typical annual income of $72,358 pays $2,114 a month for housing. That means about 35% of their pay goes to housing costs. And so we want to, and like they were saying, we don't want all of our pay to go to our mortgage, y'all. We don't want all our pay to go to everything, to one thing, because we want to be able to adjust in case things happen, in case hard times occur. So that's why I tell people, even that are buying homes, when what I always like to do first is that if you find a home with your pre-approval, I always tell people, okay, the first thing we're going to do is that if you like this particular home, uh, before we put an offer in, or let's talk to your lender. Let's get an estimate sheet as far as what your mortgage could possibly be. Because I always tell people the best thing to do is try to come with a if you're trying to buy a home, come with a game plan set, right? This is how much I want to pay on my mortgage a month. This is how much I know I can afford without overdoing, over leveraging myself, right? Every month when I pay my bills. And then also thinking like, okay, can I take some of this? If my mortgage is this, can I have those times where I'm getting paid enough where I could take some of my mortgage per se, like a second part of the let's say a second payment per se, right? So you can pay your mortgage with this amount of your monthly pay, but also you get enough pay where you could possibly take a half of that paycheck too, right? You can pay your mortgage in full and then take another half of the paycheck or a percentage of the paycheck and put half of it aside for next month rent. So in case anything happens, basically create like a buffer, like a savings, a buffer somewhere, and you're comfortable to do that without feeling like, oh, I don't have no money to pay for the utilities. I don't have no money to pay for the HOA. I don't have no money to buy groceries. I don't have no money to put gas in my car, because there's so many other factors outside of buying a home and paying for our monthly mortgage, or even if you're renting, you guys, we should try to look at it that way too. It's not always about home ownership. Some people are okay, they don't want a home. They just want to rent, which is okay, right? So even with renting, it's like, okay, let's try to adjust. I'm over here stuttering. Let's try to adjust the way in which we're utilizing and spending our income per se. That's what I do. I don't never personally with me, I'm a person that likes to pay everything off if I can soon as possible as I can. So when I get paid, whether I'm helping somebody in a real estate transaction, whether I'm doing an event somewhere, whether I'm helping a, a a bank maybe doing a BPO or different things like that, I would take whatever funds I get, right, and I'll put it towards paying things off. So like I just recently paid off my car. I had a car note on my car. If you guys don't know, which probably you guys don't know, about a year and a half ago, I got in a car accident. My car flipped over. Um, and luckily nothing, I wasn't hurt, no damages occurred, and I had to get a new car, and so I had a new car note, and having a new car note, I was like, dag, typically like I said, I like to pay stuff off as quickly as I can to alleviate that debt to income. And then in those months that if I'm not getting paid or I don't have no income, I'm still okay because I'm shifting my income and I'm utilizing a certain percentage of my income, so I'm not out here looking crazy. Okay. So basically that's what I did. So that's what I try to do. So that's how I tell people, maybe adjust that way. But definitely you don't want to overspend in your money. But let's get back to the real estate field. So it says right here, in more than a third of the markets Adam examined, homeowners were spending at least 43% of their wages on housing, a level the firm defines as seriously unaffordable. Among 589 counties analyzed, 582 or 98%, 0.8% were less affordable in the second quarter of 2024 than their historical affordability averages, Adams said. So again, talking about how unaffordable that housing market is getting, has been, it is getting crazy. She said, "We are grateful that you had no industries injuries. Congratulations on paying debt off." Yes, thank you. I'm like, I got credit card debts still I need to pay off, and I got a student loan debt. Oh, Lord Jesus, God help me. But it's gonna get paid, y'all. Hey, it's gonna get paid. All right, let's adjust real quick to what they're thinking in 2025 real quick again. I appreciate you guys for joining. Don't forget to subscribe to the channel, hit that like button. It helps us to kind of move through the algorithm. I appreciate you guys being here on a Sunday night. You definitely could be anywhere else in the world, but you decided to tune into the channel and chat with me. I appreciate it. So I'm not over here talking to myself. I'm like, even though you guys, I'm like, so but anyway, let's make this a little bigger so y'all can see. Okay, so, and if you have any questions, if I can answer them, please put them in the chat below. You know, again, like I said, I don't know everything, but what I do know, if I can answer it for you, I definitely will. If I can't, I'll try to find somebody that can help you. Um, you know, we're as people, we all know different things, so I don't claim to know everything. Is there a lot if stuck paying rent? A lot of people are stuck paying rent instead of saving for a mortgage. Yeah, you got to be careful too, because I do get a lot of people. We are here for the scoop. Okay, well, stay for the scoop, baby. Stay for the scoop. I do get a lot of people too that do want to buy and then they end up renting. And again, your path is your path. However, I do tell people from what I'm personally seeing in the market is that if you do have a goal to buy in the future, when you go to rent, just make sure you're able to save wherever you're renting at. Okay. So if you're gonna rent, go rent. You know, for a year, for 2 years, 3 years, however you feel is necessary for you to rent in order to save. However, we have to be mindful too. We don't know where real estate is going. If a financial situation happens, you might, you know, luck up in the future. You might get a house for less than its value. And I'll show you guys something because actually a client of mine is looking at this house, and this house is actually up for foreclosure. Currently, it goes up for foreclosure at the auction January of next year. I have been trying to reach out to this agent, but this agent is a disaster agent. I should call the phone, but I don't want to put him on blast because baby, when you call the phone, he don't pick up the phone at all. And in Georgia, we have different MLS systems. So the Metro Atlanta area, we have the FMLS and the GMLS. That's what we have to with our brokerage, we have to be a part of that particular MLS. But there are other MLS systems. So you have the Central Georgia MLS system, you have Central Georgia MLS system, you have the excuse me, the mid Georgia MLS system. Have a different lot of different MLS systems down here in Georgia. That's why when some people reach out to me, because I get emails with people asking me to help them in regards to real estate, whether buy a home, sell a home, and if they're in a certain part of Georgia that I don't service, I can't take you on because my MLS system is only what I'm privy to, which FMLS and GMLS, and I don't want to do you a disservice. So I rather, if I can help you and I can refer you out, I will. If not, I'll let you know if I can't, because I'm not in the business to do anybody a disservice at all. This is not why I got into real estate. I got into real estate to advocate and educate. That's my goal. That's all I'm here to do. So yeah. But this realtor is based out of the Macon area, Georgia. So Macon, Georgia is in like central Georgia. So you get so central Georgia. And I helped a client buy a house in Warner Robins, which is below Macon, which is in central Georgia. But that realtor was smart enough to put the that property in the GAMLS system. So it reached up to us realtors in this metro Atlanta area, even though Macon is about close to 2 hours away from me. And then I went to Warner Robins with my client to help her buy a house, and it was about 2.5 hours away from me. But you know, we drove together in the car down there, and she was able to purchase. Uh, but that's because it was in our system. Hey Clark, what's going on, Debbie? What's going on, Debbie? I love Debbie. Hey, she said, Clark, glad I caught a live. I'm glad you came into the live too. Thank you. What's going on, Vaughn? Hey, what's going on? Happy Sunday. Happy Sunday. I'm glad you guys came and caught this live. Um, Appreciate you guys being here. Really do. I'm like all over the place talking. But okay, so let's talk about real quick what they're saying as far as 2025, right? It says rate, sales, and prices. Here are housing market forecasts for 2025. So what we did earlier, what we went over earlier, everybody that's just joining us now, we kind of talked about the Fed's cuts. Yes, smash that like button, you guys. Smash the like button. Don't forget to subscribe to the channel. We are here every Sunday, 6:30 p.m. I will be in January of next year. I will have a home insurance agent on the channel. We'll be talking live about home insurance because this is something that I've been dealing with. As you guys know, if you watched the sold as is video that I did, and I had a current buyer that I'm working with now. We discussed this as far as when it comes to when you're trying to buy a house now as a property as a home buyer, that some home insurance companies are not insuring houses with roofs over like 10 years old, 15 years old. So this house that we had under contract, we saw the SPD, which is the seller's disclosure the SPD, the seller's property disclosure. I let the client know that, hey, it said 20 years old the roof was when we saw it. And I had told the client, like, hey, I don't know if you know this, but I've talked to a lot of insurance agents, you know, working with in real estate. And then doing, you know, helping people buy homes. And I know that this is becoming an issue where after a certain year span when it comes to the roof, they're not insuring people, or if they are insuring it, is more expensive. So I'm gonna get a home insurance agent on here. So this not only helps for you if you have a home already, or if you're looking to buy a home in the future, what you should kind of like, maybe some things you should know. If you guys have questions, she works for, I don't know if I could say her company name, so I'll let her say it if she's okay with saying it when she comes on live in July. But she works for a big nationwide carrier. And the only reason why I'm doing that is because a lot of people end up with the bigger carriers, whether it be State Farm, Allstate, who else is big? Nationwide or whatever. I think Nationwide is one. I don't know. Or is it Nationwide or Allstate? I don't know. But these big carriers, so you guys can kind of know, because a lot of the big carriers are the ones that's not accepting stuff. So but yes, smash that like button. But we will have a home insurance agent on in January. We will have another talk with the lender next year, and we're definitely bringing on some other YouTubers that I've been on their channel, and they're gracious enough to come over here to my little small channel. So, and I appreciate it. So we'll definitely have talks with that in the future. But smash that like button. Okay. So this is what they're talking about when it comes to 2025 forecast. We talked about this though on the last live, but like I said earlier, before, if anybody just joined us now, we were talking about the Fed rates. That the Fed, they cut the rates just a couple of days ago. And instead of interest rates going down, they actually went up high and then they bounced back down. So now they're starting to kind of re-soften back down a little bit. So we're talking about that, and we're talking about how homes are the unaffordability level of homes. And if people, you know what, I would say most people that bought homes like 2018, 2017, 2019 got in at a good time. Even though people say, oh, I got in at 2020, 2021. I really feel like people, and it's, depends. I feel like a lot of people who were able to buy like a nice sound home in like 2018 for like 100 and say 20 something $1,000, like they got it at a good time, because you still got a nice comfortable kind of mortgage going on, baby. Because the interest rates around that time, I believe, were like in the 3s and the 4%, depending on how, like, the debt to income ratio, the credit score, all that stuff. So you got a nice little nice shoot. That mortgage is probably, what, like $600, $700 with like taxes and insurance going up now. It might be like, what, 700, 800. Mortgage might have been like $500. That was the best time to buy the house. But if you bought a house in 2020, 2021 with a lower interest rate, you got, might be like $1,000 something dollars, like $1,200 a month, $1,300 a month, $1,500 a month. But I'm telling you, to get underneath that $1,000 price point, baby. Like my one client, she like, that's the one that bought in Warner Robins. She actually bought in 2022, 2023, 2022. But because the price point was lower, even though she had a 6% interest rate, her mortgage is only like $900 something dollars. So, baby, talking about staying underneath that $1,000. Anyway, it says the year ahead outlooks are always tricky. Housing market experts are not immune from making reasonable forecasts in December that fall apart by the first quarter of the following year. So basically what they're saying is that all this stuff is predictions. We don't know what the future brings. As Christina, one of our fellow YouTuber real estate creators, go over to her channel, Christina Smallhorn, and watch her videos, subscribe to her channel. She always says, like, she brings out her crystal ball. It's so funny because she's like, I can't predict. Like, she's like, what am I thinking or whatever. It's funny. It says still it's worth listening to what people in the industry are expecting. So this is what they're expecting. It says, where will mortgage rates go in 2025? Mortgage rates are likely to remain in the high 6 range throughout 2025, with the weekly average rate fluctuating, throughout the year, but averaging around 6.8%, says strategists at Redfin, the national brokerage. So this is what Redfin is predicting, that mortgage rates will be in the higher 6s. I feel like, again, I'm not a mortgagor, I'm not a lender, I don't work for the feds, I'm just a realtor. But I feel like from what I'm looking at, the data, how things have been moving, how stuff is adjusting in this country, I feel like it will be definitely in the 6s. It will be hovering around there. I feel like it might be like maybe mid 6s, and of course it will be some high 6s. But it depends on what you're looking at too. FHA typically has a lower interest rate than the conventional has. VA usually has a lower interest rate as well than convention. So it depends on how you're purchasing said home. But if you're in that conventional space, as far as buying, the interest rates will probably be higher 6s, maybe low sevens. But I think it'll probably simmer kind of in that six range. It says buy that dream home. Says the panel of experts at Fannie Mae and Paulsonomics LLC says they expect mortgage rates to remain elevated but modestly decline over the course of the year to 6.3%. So they think it's going to go to a lower six, the lower sixes. It says the Mortgage Bankers Association expects a gain of points. So this is in regards to home appreciation. Hold on. How did we go here? Okay. We just skipped over this whole thing. So Realtor.com forecasts a full year average of 6.3 as far as rates. Rates will average 6.4 according to Mortgage Bankers Association. So again, they're keeping the mortgage rates that in the sixes, right? I know most people are hoping that it goes into the fives, maybe get to the low fives, possibly the high fours. And I know that's the reason why some people are kind of going even like the new construction route. Because some of these new construction places are building these homes, even though get a home inspector, y'all. They're building these homes. A lot of them are built to spec too. So what it means when they build to spec is basically they're building this. They already have homes kind of laid out like how they want to build them, and then you can't go in there and you cannot personalize them per se. Like you can't say, oh, can I get a 2-car garage if they already building homes with all 1-car garages? So that's called building it to spec. So they're building. They have like their own layout. So they'll, if you go to some of these new constructions, that's like, oh, this is the ivory floor plan. This is the green floor plan. This is the purple floor plan, and they already have like those layouts of what the floor plans look like. So those are the specs per se, and that's how the houses in the community will be built. So they might say, well, which floor plan are you interested in? Similar to like if you're renting, right? If you go to a rental complex, they'll say like, oh, this is the the red floor plan. I don't know. And everything is a similar floor plan with it in different parts of the complex, basically. And that's what these new constructions are doing. And that's why they're kind of like banging out houses quickly. However, I tell people, please get an inspector, and you guys can get an inspector through every phase of the building. So if you catch the new construction being built right at the grading part, the foundation part, as far as laying the foundation, putting the poles in and all those things, you can have an inspector come for that pouring stage. You can have an inspector come for the drywall stage. You can have an inspector come for when it like when the house is actually fully completed, or insulation is going on, all those things are going in. But definitely have a home inspector for new construction too. The new construction people say, oh, our people will go in there, we'll do the blue. So what they do down here in Georgia, I don't know if they do it in other places too, but they call it blue wall, like the blue tape inspection, where they'll put blue, like they'll build a house, and you'll go in there and you can go in there, and this is your quote unquote inspection, and you can put the blue tape next to different things that you see wrong with the house, and then they're like, okay, fix this, and then you like, and then they're like, okay, we'll fix it, and then you'll close on the house, and you'll go in the house, you'll be like, they didn't fix it. So get a home inspector. I know some of these new construction places too will say, we don't allow for certain home inspectors, so just make sure the home inspector is licensed, certified, licensed, or whatever they require the home inspector to be, so you guys can have an effective home inspector. And just because you're getting a home inspector too, doesn't mean that this might be the home inspector that works for you. Try to find a very knowledgeable home inspector, a home inspector that you believe in their work, you trust their work. And I know it's hard when you're a first-time home buyer, you don't know much about the home inspector. Just try to do some research on them. Everybody, like when you guys go to certain restaurants and everything, you go look for reviews. Nowadays it's easy to find reviews, so go find a review if you can, But yeah, that's what I would say. But she said, with new construction, are rates expected to be lower? So as of right now, new construction, the rates are lower just because what's happening is that some of these new construction builders, they partner with a lender. And then when they partner with a lender, because they need financing, right, to build these homes. When they partner with a lender, they basically create a deal, right? They're like, okay, we're about to build. We bought 5 acres of land. I'm just, making up a scenario, guys. We bought 5 acres of land. We're about to build 200 homes. And we're going to finance this building and stuff with you. We're going to finance anybody that comes in with you. So if they come straight to the sales agent on site, the sales agent will say, oh, hey, if you want to use this incentive, we have a great incentive for you. You can buy this $500,000 house, and you can get 3% interest rate for for a fixed 30-year fix, or you could do a 2-1 buy down where you can get 3.5% the first year, 4.5% the second year, and then the third year it'll adjust to the 5.5% or whatever the mortgage per se is, whatever at that time, right? So yeah, so new constructions will definitely have that. I always tell people if it makes sense, because I know typically to get some of those incentives, right, you have to go, they'll say you have to use our lender, right? I've heard situations where people haven't used the preferred builder's lender and still got incentives. Did they get the interest rate per se incentive? Probably not. But did they get the like closing cost incentive? Yes. So it just depends on who you utilize, but typically some new constructions rates will be lower as far as when it comes to interest rates, and that's what they do. Like they work in hand in hand with a lender. The lender is financing the build. The lender is financing different things, so they come to an agreement, and then they pay so much thousands of dollars to the lender to buy the rate down for people. And so that's what they do. He said great things. No problem, no problem. So, but definitely, so I'll tell people like when you go to a new construction, because I know what happens. So what happens typically is people, you're driving around, right? You're just driving, you see a new construction home being built, you want to go inside there, right? Again, people are attractive. People look at stuff at eye, right? Attracted by eye. That's why when you go in a grocery store, like I said again, you see the pretty stuff put to the front or the colorful stuff. It attracts your eye, right? Because if you guys don't know, like salmon is not pink. So they dye the salmon pink because it attracts your eyes, right? So when you go to the fish section and all this stuff, it's attracting the eye. And that's just like new construction, right? And so people will ride into these neighborhoods and they'll go in and they'll talk to the salesperson. The salesperson works for the builder. They don't work for you as a buyer. You're a customer to the salesperson, right? So I always tell people when you go visit new construction, if you can, you don't have to. It's up to you, whatever you want to do. But if you can, get a realtor to represent you. So you have your own representation and the builder has their own representation. They have the salesperson in the office. The salesperson is always going to be nice. I have a lot of friends that are sales associates for new builders down here in Georgia. I like it because one, I like to have that reputation with them because one, not only are they my friends, I like them. They're genuine, like we're genuine, create a genuine friendship, wonderful people. But at the end of the day, you get inside knowledge, you get inside information about what's going on with the building part, right? And it's easier to just kind of, help the consumer at the end of the day and not get screwed in a situation. But that's why I said I do know that some builders are like, hey, we don't allow for certain inspectors to come. So you got to make sure you meet their criteria with the home inspectors that are coming from outside. But always get a home inspector from the outside. If you can, work with an agent from the outside to advocate for your best well-being. And read over the documents. I had a person who went to a new sales construction situation, not in this state, because so I had they were in a different state. They were talking to me, and we had a conversation. And I said, read over everything. I always tell people, even when I work with clients, I say, read over everything. Like I'll read it to you, and I'll paraphrase it because I've read these documents so much that I'll paraphrase it now. So sometimes when I'm reading stuff, I'm not realizing like, hey, Devon, I gotta remind myself like, this is the first time this person is hearing it. So stop just paraphrasing everything and read through it so they can understand what you're saying. But I tell people after I read through it, you read through it again. Take it home before you sign anything, before you send anything back to me. Read through it again. If you have questions, call me. If you need because the whole thing is that you don't want to get stuck doing something and you're not understanding what you're doing. So read over it, ask the questions before you do anything, right? I don't know. That's the best thing I can do. Let's get back to this before. I don't want to keep you guys here all night because I'm going on a tangent. But anyway, it says, will home prices rise in 2025? It says Redfin expects a 4% rise in the median home sale price. Fannie Mae and Boston forecast calls for 3.8% gain. Zillow forecast for 2.6% home value growth in 2025. And then it says the Mortgage Bankers Association expects a gain of 1.5%. So I think that there will be an appreciation gain in 2025 because typically real estate appreciates. And it's not so often that it depreciates. However, I do tell people real estate can depreciate too. If you don't upkeep the property, if you don't take care of it correctly, if you don't put new systems in place, throughout the years as things age. That does cause, depreciation. However, it might not seem like depreciation to you because as the years go on, prices adjust. And so with prices adjusting, you're still getting some type of value out of the home when you sell it, because you might have bought the home, say, for 100,000, and now you're selling, let's say, 20 years later, and homes around you are worth 300,000, right? But because you didn't take as much care of your particular home, you're not going to get the $300,000 price. It's going to depreciate to maybe 250. But you bought it for 100,000, so to you, you still got appreciation, but you got the appreciation that happened in that mix too because of the upkeep of the home. So if you have like any wood rot trimming around the house, or if you have if you want to update your systems, your water heater, your HVAC systems, that furnace, their air condenser that sits outside for the air conditioner. If you have like the roof, maybe put new windows in, different small little things here and there to create more of an appreciation. Maybe, the planking on your house needs to be changed out. And like if you had that hardy planking for the siding, or if maybe if you, power wash the brick, I don't know. But I don't know. I know now what people are doing nowadays, everybody's painting the brick white. I'm like, oh Lord Jesus. I like the natural red brick, but I get it. It's the modernized times. Everybody like the the white brick, and everybody's getting this laminate LVP flooring. And I'm like, oh Lord, what happened to the hardwood flooring? But everybody, things change. Things change. So you adjust with time. Will home sales rise in 2025? The Mortgage Bankers Association expects a 5.1% increase next year. So they're expecting that the homes will rise 5.1%. Zillow forecasts a 7% increase. The economics team at Fannie Mae sees a 4.2% bump. The National Association of Realtors thinks sales will jump 9%. So this is saying, will home sales rise in 2025? So home sales can only rise. This is how I look at it. It can only rise if people are willing to pay the price. If ain't nobody willing to pay the price, then nothing has nowhere to go but either stay at where it's at or go down. You can put the price. The thing about listing your home or trying to sell a home, right? We always, as realtors, we dictate how much your price could be according to the market. And also we know that an appraisal has to happen with an appraiser in order to get that number, especially when it comes to financing, right, through the lender. However, you as a person can price your house whatever you want to price it at. Like you have some people out here that sell their homes by themselves, which are called for sale by owners. They're like, hey, this realtor I talked to told me the house only $200,000, but I want $300,000. They price it at $300,000. You can price your house wherever you want to price it at. The market will eventually dictate it, and the buyer who buys it will basically tell you what the price of your house is worth outside of an appraisal if it's being financed too. So, you can price your home wherever you want to price it at. It's up to you. But again, you can't, what I tell people is that even with the real estate market, I can't see how to increase the prices or how home prices are going to rise next year or next month or whatever, because guess what? At the end of the day, the buyer is really the person dictating the price of the house. Because if you don't have a buyer, your house can't get sold. So, so if we as people, even though I know it ain't gonna happen, but if we as people stop buying stuff, we might be able to adjust prices. I don't know. Just fantasy. Okay, this is the bonus thing, so we're not gonna read that. That's the bonus part. So let me show you real quick, you guys, the MLS system, and then I'm gonna get out of here, and I'm gonna show you what we were looking at as far as this home. This home is actually in foreclosure. I'm gonna show it to you guys. I'm not gonna be able to show you the address. So let's look at the foreclosure home first, and I'll show you what's happening in the MLS system, because I was telling people earlier how people are still down here in the Atlanta market. They're still buying houses with cash, and they're buying $1 million homes with cash. Like, where's this money come from? Where's it coming from? All right, so let me know if y'all can see this. This is the house. So my buyer that I'm working with now, we've been working actually together since April. So I have a lot of people that I work with where it's a long process, right? It's a long time. And it's not that people don't want to buy a house. It's just that how the market is going, how the market is shifting. We put offers in numerous times. However, after home inspections are done, a lot of indicators occur as far as things needing to be fixed. Things need to be adjusted, whether it be systems, whether it be roofs, different things like that. So again, I'm not in the business of pushing someone to buy a home and saying, oh, it's okay, you could just go and get this fixed. No, it's like if the seller's not willing to replace the roof, the seller's not willing to give you some money towards closing costs, So then that way, when you come to the closing table, you can now take your closing cost money to repair certain items. Then I don't think you should buy this house. Again, you as a buyer, you can do whatever you want. Again, I advocate and I educate. So I tell people, I'm like, you can do whatever you want. I'm just an honest person. I would never want to be in a house that I know my roof about to fall off tomorrow. I don't want to be in a house that my roof is leaking. So why would I put somebody else in a house like that? Why would I convince somebody to buy a house like that? I don't, that's not why I got into real estate. I got into real estate to educate and advocate for somebody. I'm like, no, we're not going to put you in a money pit. That's not what we do. Cash is king, always is. Yes, cash is king, and it's definitely kinging down here in this Metro Atlanta area, Debbie. But anyway, let me get into this so I don't keep you guys too long on a Sunday night. So this is the house that my buyer sent to me. So this house is in a different MLS system. Like I said earlier, as in this Metro Atlanta area through my brokerage, we are supposed to be a part of the FMLS system and the GAMLS system. So the FMLS is the first multiple listing service system. And then the GAMLS system is the Georgia multiple listing service system, right? For realtors, this is where we put the listings at, information, remarks, all these things inside this for the house. This particular agent, this is a whole backstory, and I ain't gonna tell the business, but he was with our brokerage. They ended up firing him because he's a hard agent to deal with. So he put this listing in the central Georgia MLS system. So I don't have access to the system. So my buyer sent me this, and I was like, I didn't see this in the system. So then I went down, I saw the what MLS was in. I was like, oh, that's why, because I don't have access to this MLS. Let me see. I want to make sure I don't show the address because okay, so this house is currently priced at, as you guys can see, it's priced at $213,360. So this is what this particular realtor put the price at. Again, this is in the GMLS system, the CGMLS system, the Central Georgia MLS system. And it's so funny. I called this MLS system to try to see if I can get the information to kind of get it showing from my buyer. And I called the MLS system. It's like, oh, when I told who the agent was, he was like, oh, Lord. Not that person again. He's the worst agent. He's so hard to work with. I was like, oh Lord. I was like, not everybody's saying the same thing. I call one of the brokers. They say, run as fast as you can. I'm like, what is going on? Why is this realtor still doing so much business if everybody is like, he's horrible? But it is what it is. And then like one of my colleagues was like, you should just call the homeowner and say, hey, it's difficult to get in the house. Can't contact the agent, blah, blah, blah. But my buyer ended up seeing the HOA amount monthly, and she decided that she didn't even want it anyway. So I just didn't go any further. But anyway, the house is listed currently at $213,36, as you guys can see. And now I got to stop sharing because I got to bring it down real quick so I can move the address. And I'm going to show you guys. I'm going to bring it back up real quick. I skip the address because if not, like I said, this YouTube will definitely strike the video and this will all disappear. We sat on here on this live and talked and everything disappeared. So that's the remarks that the agent left. It's only been listed for 4 days. Oh, I just showed the agent's name. Sorry, you guys. I don't want to show his name because I don't want him to feel like I don't want nobody to, oh, you're bullying me, because I don't bully people. I'm sorry. I don't want to show him. But anyway, so right here, this is because this house is in for foreclosure. So remember, it's priced at $213 on the realtor side, right? The realtor priced it at $213-ish. And then we're going to go to the foreclosure side. So this house is in foreclosure. I gotta X off the screen again because I gotta go down to I had to X off the screen again, sorry, because I don't want to show the address, and I'm gonna put it back up here. So I clicked on the foreclosure side of it now. So Zima or I don't know how to say it. I guess Zima, I don't know how to say it. It's they do stuff for foreclosure. So it says auction. It's up for auction. It's supposed to auction January 1st of the year. Like January 4th through the 8th or something like that. And so they have it, the opening bid. Ooh, don't show the address. They have the opening bid at $160,000. So this is what got me thinking, because as a realtor, I can see like the back part of it, the finance part of it. So I was like, well, I saw that this particular property, this person looked like they refinanced. So I was like, is this auction on the second mortgage or the first mortgage they refinance, or did they refinance out into a new mortgage? And now this is how much this is, because they have the opening bid at $160. The realtor has it at $213. So I think that $213 is that space in there for like commission and hopefully giving the homeowner some type of possible less money to bring to the table. So now what I'm going to do is I'm going to show you guys how much they bought this house for. So they bought this house for, all right, I'm gonna show you it. I can't scroll through the whole thing on my MLS because again, it has the information here. So I'm just gonna show you the bottom part of it. So they bought this house, as you can see, in September 30th, 2022 for $259,900. So right here where it says terms, it'll say like other. So they, excuse me. So terms of other, they put it was like 98% down. So it looked like with the 98% down, I don't show too much of their information. But yeah. So that means the house is now up for sale for 213. What's the calculator? So let me get a calculator real quick. So let's see how much they might possibly have to bring to the closing table. So they bought for 259,900. I don't know how much they paid on the mortgage so far. They said it's auctioning for 160, so I don't know how much the mortgage is. So this is me just going off of these numbers that I see here and what the house is priced at. I'm just going to say 214. So they possibly might have to bring about $45-ish thousand to the closing table. It might be lower than that, just because I don't know what their mortgage note, how much they paid off, and whatever. But they just bought the house. We're in 2024, about to be in 2025. They just bought the house basically 2 years and something ago because they bought it in September. So and they're already, you know, under trying to get out of it, and there's a whole situation behind why this is happening. Because of course I looked into the backlog, I looked at deed records and everything because I kind of do the most. So I was looking at everything and I know why this is possibly happening, but I don't want to put this person's business out on the streets. So, but yeah, so this is the foreclosure I was telling you guys about. That's kind of happening down here, which kind of sucks. All right, now let's get to these homes real quick, and then I'm gonna get out of here. If you guys have anything to say, any questions, put it below inside the live chat box. If you guys are seeing this after we're off the live, please don't forget, if you have anything, please comment below. It's always great, to have a discussion in the comments after we go live. Who's that? Oh, this might be my white hair. I have my gray hairs. All right, let's I'm going to show you guys real quick. So I have to, again, because I don't want to show people's addresses, I have to, what is going on with this MLS? I have to do everything off the screen first so I can show you guys. So what I was saying earlier, how people are paying, still down here buying homes, $1 million homes with cash, which is crazy to me, but people are doing it. All right, closed in the last 180 days. All right, let's see. And I'm going to show you guys, because I'm like, where is this money coming from? And can I get the money? All right, so I'm about to show you guys a house. Somebody bought this house cash for $17 million. It was priced at $35 million. I can't show you how much it was originally priced at because the address is up here at the top, but I'm going to show you how much they paid for the house. And this is what I'm talking about as far as there's still cash looming around here. And that's why I feel like they keep saying, oh, we're in a healthy economy. We're in a healthy economy, because people out here buying stuff cash. I'm like, what the heck? Can I get this cash? All right. So as you guys can see right here, so I'm not telling you no lie. Like I said, I look at the MLS system all the time, being nosy, trying to figure out what's going on. So they closed this house July 12th, 2024. The price was $17 million. They didn't get no seller's concession because the house was priced at $35 million. So, and they paid cash. They paid $17 million in cash. I don't know who owns this house because again, they put it in the LLC. So it's probably somebody of status, whether a business owner, someone that owns like a big company, maybe a celebrity that's big. I don't know, but it's in the LLC, which I said they typically do. So let's see, the house is priced at $35 million minus $17 million. They got $18 million off. Well, $18 million off. So they paid $17 million in cash. So that's what's happening down here in this Metro Atlanta area, you guys. And what's happening out here, she said, looks like, yep, Debbie said, looked to me like they paid about half in cash. Yes, they did. So they paid a little bit more over than half in cash. Yep. They paid, less, sorry. Yeah, less. Because They got $18 million off. So she said, gotcha. Yep. So yeah, so people are down here. This ain't the only one, but I don't want to bore you guys and go through all these $1 million properties down here. But as I was going through them, a lot of them were buying them in cash. I'm like, where is this money coming from? Where is it coming from? I'm like, where is this money coming from? How can we stop corps from buying up affordable houses for rent instead of letting families buy them to live in? I don't know. A lot of corporations actually, as the year had came to an end, and I don't know what 2025 is going to look like, but a lot of them kind of slowed down mid this year, um, stopped buying as much as they were buying prior, and a lot of them because they wanted to basically slow down, readjust their plan to figure out how they're going to buy what they want to buy. So I've noticed down here in the Metro Atlanta area, we still got people buying down here in this area as far as corporations. However, what they've done is that a lot of them now are kind of liquidating their properties too down here. So which sucks. So right, so a colleague of mine, it's not particularly me, but we were in the office the other day, and she had a client who bought a couple years ago for a house in the McDonough market. And I don't know if she's on here tonight or not, but in the McDonough market, bought at the price that it was, as far as everything comparable in that area, everything. But they didn't realize that it was so many corporate investors in that area. And now this year, all those corporate investors are unloading their properties and selling. And so everything in the subdivision that's owned from a corporate investor is undervalued as far as to what the person bought a couple years ago. So basically, it's almost like they're creating their own small little crashes in subdivisions, like these corporate investors. And that's what sucks because you got to know what's in your subdivision. You got to, if you are an HOA, like that's the catch 22 of HOAs, right? It's great to be in possibly an HOA subdivision in the sense of if they limit rentals, as far as corporate rentals, as far as short-term rental, long-term rentals, if they limit the rentals, right? Of course, HOAs are getting out of control too. So hopefully you're in a good HOA, because I'm like, honestly, I don't want to be in no HOA. That's just me per se. But everybody's, it's different, and there's some pros to HOAs, and then there's a lot of cons. But there are some pros as well, and that's a pro that an HOA has in place, right? Where it's like, we just created this whole subdivision. We don't want no investors can buy here, or maybe only 20% investors, 10% investors, like investor-owned properties. So in that way, when they go to sell these things in the future, they're not basically crashing the subdivision, And I don't like to use the word crash, but like they're kind of modifying the home prices in the subdivision. So, and that's bad because now this person who bought a couple years ago, the equity is basically gone because these investors then put like 10 of their houses up in the subdivision undervalued because they're trying to unload and liquidate properties, and they're selling for lower. So when it comes to how can we stop corps from buying up affordable houses for rent instead of letting families buy them to live in, my best suggestion is say the person that's selling the home, sell it to another family. That's the best way we're going to be able to stop them from buying a home. Like, I know it can be very wonderful to see an investor give you a money cash, maybe above what you're asking for, maybe beating out all the other offers. But the best way that we can kind of slow them down is like, hey, if I'm selling my home, I priced it at $150,000. Somebody comes and say, hey, I'm willing to give you $150,000 for it. Investor comes and say, I'm willing to give you $160,000. I know you might be tempted because you're getting a little bit of $10,000 extra, but you just say, you know what, I want to kind of limit the investors in this space. I'm going to give it to a family that's going to pay $150,000. And sometimes we, as our own people too, we have to realize that we have to be accountable for our actions as well. It's just not corporations per se. It's us as our own personal people. I got to say, hey, right at this moment, I just want to give it to a family, so we can limit this. So that would be my best thing, I would say, Monique. Unfortunately, in a free market economy, you can't. Yeah. Yes, Debbie, it is very hard. It is very hard. It is very hard. There should be a way to stipulate that houses are going to be lived in by their owner. Yep. So that's the best way I can say that. Like, as a home seller, when you talk to your realtor, let your realtor know that I want a home that's going to home own or occupy the house. And some realtors, they will push you to try to go with the best offer per se, cash offer. They're like, oh, this is so great. Look at this. It's cash. They say they can close in 7 days, in 14 days. because maybe the realtor, they just want their check right away, right? They just like, I just want my money. And or they're like, and they're trying to make it seem like, oh, I'm doing the best for you because I'm getting you more money. But because typically most houses close within like 21, 28, 30 days, 45 days. Sometimes it can span out a little longer depending on how the financing is going. But that's it's usually like a month per se that it'll close. But cash people can close quicker, right? And there are some people out here who have cash that are living in homes. Like the house that I just had listed and we recently closed the beginning of December with my seller. We closed with a house, and these people they didn't um they didn't have all cash, but they were able to close quickly. Um, and they were conventional, but they were homeowners, and I've closed before with somebody that had cash. It was a homeowner, so some people have money too. They're not an investor. That's where an HOA may help. They can limit non-owner occupied homes in their division, i.e. rentals. Exactly, Debbie. Yep. They can limit the rentals. They can say rental restrictions. They can say no rentals. They can say 10% rentals, 20% rentals. So yep, that's definitely where HOA can come in handy at. But I just wanted to show you all that the real estate market down here in Atlanta is very interesting. We have a lot of cash buyers still down here. People are still looking at Metro Atlanta as a place to come to live, to spend money in. I'm always floored every day when I see this in our MLS system. My predictions for 2025 is that we'll probably be in the sixes with interest rates, somewhere in the sixes, mid sixes, uh, low at maybe close to the low sixes, depending on what type of financing you do. VA, FHA, USDA, higher or mid sixes, depending on if you're doing conventional, possibly low sevens, depending on credit score, debt to income ratio. And when it comes to houses actually appreciating in price, I believe that there will be appreciation and depreciation. I believe homes that are very unobtainable and too expensive for the normal American to be able to afford outside of these people paying $17 million in cash. But for someone who is working a regular job, enjoying their own job, whether it be a white collar job, a blue collar job, and they're making a living to survive, they'll possibly because people won't be able to buy these price points because they don't want to spend all their money on their mortgage. Those higher price points will adjust down a little bit, either whether they'll come down a couple few thousand in regards to saying if a house is $600,000, they might adjust down $30,000, $40,000, maybe $50,000 in price. Or they might give more in closing cost incentives. On the resale side, of course, new construction is a whole different beast. They have their own financing. But I feel like houses that are lower in price point, maybe 100,000, 200,000, depending on where you're at. Because some places there are houses that are still at $100-something thousand. And even in Georgia, there's spots down, as I said, as you kind of get into central Georgia, you go down there towards Macon, you go down there towards Warner Robins, you go to Perry, all that central Georgia area. Maybe you'll go, which is not central Georgia, but you'll go towards Columbus. You still have houses down in that Columbus area. Even in this Metro Atlanta area, you still get some houses at $100,000 that are townhouses. They might not be in the best condition in this particular area, but they're still out here, depending on what you're seeking. But it's not a big amount. Okay, so I don't want everybody, because every time I do these lives, I get emails and I get phone calls. So I'm not saying that we have it all available, but I'm saying that you can find different things here and there. But I'm predicting that those price points might go up a little bit, because what's going to happen, just what I'm looking at, what I'm seeing from the data, from the people I'm talking to, from what I'm seeing, is that those prices, if people decide to come into the market next year to buy because they finally just want to buy, they don't want to wait no more, it'll create competition a little bit, which will bring in a little bit of the first-time home buyer, even though they're predicting the first-time home buyer will be around like 20%. First-time home buyers were traditionally, they were about 40%. So that has shifted down. But if some people do come back in the market that don't want to wait no more, I'm seeing that they'll probably have to. All right, see you, Debbie. Debbie, thanks for coming on. She says, nice convo, gotta bounce. Happy holidays. Happy holidays to you too. Thanks for coming on. I'm going to get off here too. I stayed longer than I was supposed to, you guys. What's the best way to find rent-to-own homes? So you can find rent-to-own homes. The best way is, one, of course, talk to your realtor. See if a realtor knows of any homes that are doing rent-to-own. There were some programs that were going on before. I don't particularly like some of these programs, but hey, it's definitely worth looking into them. They had Divvy Homes. I don't think they're in every state though. You can Google Divvy Homes. There was another program called Home Partners of America. And there's several different like rent to own programs. I had a bunch of them. I gotta find them. Rent to own home programs. I gotta find them, but I'll find them. But you could definitely ask your realtor because everything is kind of local to your state and your city. So the rent to own programs that I have down here in Georgia might not have that. These companies might not be in your area. So I definitely would say ask the realtor there, and they can kind of guide you that way. But those are the best way. And if you just want to go on Zillow and just type and just look at the homes and just read like the remarks, and you might find it that way too. That can be very tedious and timely, but you can find it that way too. But that's the best way I would say. Talk to your realtor in your area. Ask them if they know of any rent to own programs that's local to your area, and they can guide you that way. But yeah. But anyway, you guys, I don't want to keep going on and on and just chit chatting all night long. I appreciate everybody for joining the conversation, jumping on. Again, we're here every Sunday, 6:30 p.m. And we will be back next Sunday after the holidays. Please enjoy. If you celebrate this holiday season, please enjoy your holiday. Have a wonderful, she said, okay, thanks. You're welcome, Monique. Have a wonderful holiday. Enjoy it with family, if you can. Yeah, just take care of yourself, stay healthy. And I appreciate you guys again for joining this live. Don't forget to like, subscribe, share. And if you are watching this video on replay, don't forget to comment below. Let me know where you're watching from, and I will check you guys out next Sunday. Thank you guys. Have a good night. Bye-bye.